Yeah, another thing that I think has made the short-term rental market good is just the mass migration where everybody was shuffling around and changing their lives post-lockdown.
Mhm.
And so, they're going to new places. I mean, my ex-girlfriend's doing this right now, so I can totally comment on it, right? And she's done it twice now. She's rented for 1 month at a time, Airbnb properties in Florida because she wants to move to Florida from San Diego. It is my pleasure to welcome Rich Summers to the show. He is the founder of Fortune Cribs. He invests in Airbnb short-term rental properties. He invests in multifamily apartments and boutique hotels. So we have not done much on the hotel side on the show before. So let's dive in. Rich, welcome. How are you?
Jason, I'm doing great. Thank you so much for having me on. I'm a big fan of your show and I'm excited for this conversation today.
My pleasure. Where are you located?
Located out of San Diego, California.
Excellent. I used to live in San Diego myself in La Jolla. Rich, you were originally a government employee and you took a bold step. You cashed out your 401k and started in real estate. Tell us about that.
Yeah, so I have a background as a air traffic controller. Did that for 11 years, and along the way, I read the book Rich Dad Poor Dad, and thought, man, I need to figure out a way to get into some real estate on the investment side. And so, started reading some books on investing, primarily multifamily, and started listening to podcasts. Started going to networking events, and just became obsessed. And so, for about a 9 to 12 month span, I didn't do anything but study and learn and network, meet people. And at the time, I did what a lot of people say is too risky, but I cashed out my 401k and I pulled out a home equity line of credit against my primary residence here in San Diego. And that was my seed money to get started. My first deal was an 11 unit multifamily deal in Cincinnati. Shortly after that, I partnered with a couple of my partners, which I still have in one of my companies today. And we joint ventured on a 32 unit deal in Indianapolis. Started a podcast, learned how to raise capital, and took down a couple larger syndications. Today, I have about 350 units in the multifamily space. And along the way, started buying some short-term rentals and thought, man, these guys are really cash flowing great, even through the pandemic. Occupancy is 90% plus every single month. And so saw an opportunity there. As you know, multifamily has been very competitive as of lately. Cap rates have compressed, yields have been sucked out of these deals. And so decided to pivot. And this year, really focusing on more of the hospitality and short-term rental space.
Rich, you took that plunge, and just to give us some context, what year was that? I kind of want to put it in context as to what the market was like at the time you did this.
Yeah. So when I cashed out the 401k and bought the first deal, this is 2019.
Okay. Oh, so this is very recent then.
Yeah, I made this whole transition from, being a full-time government employee to full-time real estate investor. It all really happened in the last 3 years.
And did you start on those first two deals? I think you said the first one was in Ohio. Did you syndicate that, or was that just your own money?
That was just my own money from the 401k.
Uh-huh. Okay. And that second deal, I think you said it was in Indy, right?
Yeah. So the second deal, I joint ventured that with two of my partners. There's three of
Okay.
us.
Yeah. And then you started syndicating after that, right?
hmm
Okay, great. And any particular advice you can give people on syndication, raising money, your syndication model, anything that makes it unique or attracts investment? People would love to hear about that.
Yeah, I'd say, in terms of syndication and raising money, I think I always suggest getting your feet wet with whatever asset class it is with your own money first. And, go take down a smaller deal, get your experience under yourself. Cause, we made a lot of mistakes on those first couple deals, but it was our own money. And, those deals did pan out at the end of the day. But I'd say if you're going to raise money from people, you better trust in your bones. You're going to do good with it. And then in terms of attracting capital, I mean, it's all about networking and being very active, telling people what you're doing. When I meet someone in the elevator, they ask me how my day is. I tell them what I'm doing or what I'm looking for. And I'm a big believer in telling the world what you're looking for and what you do, because you just never know who you're going to meet.
Right, right. Yeah, good stuff. So you did the multifamily stuff. You've got that portfolio on the syndication side up to 350 units. And where are those properties, by the way?
Yeah. So the two syndications we did were both in Greensboro, North Carolina.
Yeah, that's
One
a
of
great
them's
town.
the Arbors, which is 150 units, townhome style, and then Timber Creek Apartments, also in Greensboro. It's 145 units, both value add plays.
Okay. And on the syndication component, any particular uniqueness to your model? Like, what do you charge as a sponsor fee, minimum investment, those kinds of things?
Yeah, so both of those deals, we did a 75-25 GPLP split. Acquisition fee was 2%, I believe, on both of those deals. We do a pref. So one was an 8% pref, the other one was a 7% pref. And for your listeners that aren't familiar with what a preferred return is, so if we did an 8% preferred return, that basically means the first 8% of all the cash flow goes to the limited partners. And then our return doesn't kick in until we exceed 8%. And so it kind of creates a little bit of alignment of interest there.
Right. Yeah, good stuff. And what do you do as a minimum investment?
We did 50K on both of those, but I think moving forward, we'll probably bump that up to 100.
Okay. Maybe now we transition to the short-term rental side. Why did you get into that? I would assume the thinking would be that the multifamily is easier to scale more quickly, right?
Yeah. You're talking about the short-term rentals. Why do we
Yeah.
get into that? Yeah, you're right. Multifamily is easier to scale. The reason for the pivot was really just because it's been so competitive in this climate. Looking at 100+ unit deals that have decent pricing guidance and good locations, there might be 45 property tours and 35 offers. And by the time you get to best and final, you're going to have to, one, know a lot of people and have an in with that broker. But number two, you're probably going to have to overpay a little bit to be awarded that deal. And so we felt like a lot of these numbers just weren't making sense anymore. And so, meanwhile, the short-term rentals were performing very well. You're looking at, cap rates in the, mid-teens versus cap rates in the, the threes and fours, really. And so that was primarily the reason.
But that cap rate on a short-term rental is not in the mid-teens after expenses. I mean, is that a real cap rate?
Yeah, absolutely.
Tell
With
us
this,
about that. Give us an example.
yeah.
That's phenomenal.
So we're doing deals now with clients with the startup Fortune Cribs. And so what we do is we identify these deals, we'll source them, we'll get them under contract under our company name, and then we'll assign them to clients. And we'll help the clients get the lending, we'll help them close on these deals. And then from there, our team will take it. So we'll do design, furnish, and then we'll manage all the day-to-day operations from 24/7 guest communication, the property turnovers, the housekeeping, repairs, maintenance, utilities, even the accounting, making it completely hands-off to the client. We charge a 25% commission of all the gross revenue, but even with all those expenses, we're able to hit 15 to 20% cash on cash returns for the clients. And we're looking at cap rates in the 12 to 14, 15% range. That's even after expenses.
Tell us about the properties you're buying. I mean, you
Mhm.
do San Diego, Scottsdale, anywhere else for the short-term rentals?
Yeah. So we're in a bunch of different markets. Like you mentioned, San Diego, Scottsdale, Memphis, Tennessee, Indianapolis, Kansas City, St. Augustine, Florida. It really depends on what the client's looking for. So if they're looking strictly for cash flow, we'll go into one of those Midwest markets. But if they're looking for a blend of some cash flow, but maybe some more, high growth in terms of appreciation, we might go into a market like Scottsdale. But in terms of what we're buying, it just depends. I bought a deal recently in Scottsdale, a $2.5 million single family like luxury home, doing a full reno. So putting about 600 grand into it. And this is going to be a luxury 8-bedroom, 8-bath, with a 3-bedroom guest house, pickleball court, volleyball court, basketball. It's going to have a speakeasy, fitness center. Something like that it'll be worth about 3.5 when we're done with it. And the projected revenue is going to be about $700,000 per year. And this is just off one house. So you can kind of see
But
when you go into
that's gross revenue though.
that's gross revenue. Yeah.
Okay. And so you're buying high-end short-term rentals then.
Well, that's one thing that we're doing, but we're also doing a lot of lower end deals for clients in terms of price point. So a lot of the deals we're doing in the Midwest. I'll give you an example. We just closed on a client deal in Memphis. It was a 6-bedroom, fully renovated property for 425. And that property is projected to bring in $140,000 a year with, I think, upside to bring in up to 200,000.
Right. Do you think that the short-term rental market is oversaturated? I mean, clearly you'd probably the answer is going to be no, you don't think that. But like if you just look in Scottsdale alone, I mean, there are thousands of
Hmm.
short-term rentals in one small city.
Hmm.
That's just Scottsdale. It doesn't include Phoenix, Gilbert, the outlying areas, right? I mean, it is unbelievable the number of guest beds, or I call them non-primary beds, that have been created in the world
Hmm.
since Airbnb grew up to become a teenager. It's still
Sure.
a pretty young deal.
Yeah, that's a great question. And that is data that we look at in a lot of markets. And so, I believe some markets are oversaturated. If you look at Big Bear, California, for example, Broken Bow, Oklahoma, I think some of those markets are a little oversaturated with short term rentals. And you're right, Scottsdale tends to be. But one thing we do look at is if you go on AirDNA, we'll look at the historical revenue for any given market that we're in and break it down by the month. And one thing that's encouraging is when we had a record, revenue for 2021, a lot of questions, at least I had a question, was, hey, is this stemming strictly from the pandemic and the fact that people are not able to travel internationally, so they're putting their dollars into traveling domestic, and in 2022, are these numbers going to come back? And what we're seeing in a lot of the markets that we're investing in is March of this year was an all-time record for revenue in that prospective market, and April was another all-time record. And so with that trend line, we're seeing, I think it's two things. We're seeing inflation, but also I think more people are starting to travel and electing to travel via short-term rental than hotel. And so I think with that, I feel very confident going into a lot of these markets as long as those fundamentals check the box.
Yeah, another thing that I think has made the short-term rental market good is just the mass migration, where everybody was shuffling around and changing their lives post lockdown.
Mhm.
And so, they're going to new places. I mean, my ex-girlfriend's doing this right now, so I can totally comment on it, right? And she's done it twice now. She's rented for 1 month at a time Airbnb properties in Florida because she wants to move to Florida from San Diego. All of these people moving are doing that because they want to check a place out for a while and find a permanent home, or maybe just check it out and eliminate the market and go to another market, right? So it's really hard to know how much of this revenue is solid and consistent for the future.
Yeah, I think after seeing the last 2 months of data that's been reported, and we're only in May, most markets, July is typically the peak season. And so the last 2 months of data have given me a lot of confidence that this is not just built up from the pandemic and it's here to
Mhm.
stay. We had
Yeah.
Neil Bawa on our podcast a little while back, and he threw out the number roughly 22 million Americans are adopting this new way of life to where they're not going back to the office and they're electing to um, travel around and stay in different cities around the country for 2, 3 months at a time.
Yeah.
Brian Chesky, the CEO of Airbnb, said recently, people are not staying in short-term rentals, they're living in short-term rentals.
Hmm. Yeah. Yeah, it's interesting. I mean, we're certainly all familiar with the digital nomad lifestyle that has
Mm-hmm.
gained a lot of traction. And then during the pandemic, it sort of shut down. But it's hard to know. It really is just hard to know because the world is different than it used to be, for sure. Tell us about boutique hotels.
Yeah, so the boutique hotel space is very interesting. I think there's a lot of opportunity there right now. Um, the
And
reason
and and
being,
before you go on, can you define boutique hotel? Like, what does that mean in terms of, how many keys, as they call it, or rooms? What size deal is this?
yeah,
And
I
what
don't
what
think
else
there's any
define?
any cut number that's cut and dry, if you would. But to me, it's something that's 20 rooms or less,
Yeah.
and it's something that's too small for more of the institutional players to be interested in.
Right.
And I think there's a lot of opportunity in this space because traditionally a lot of these deals are owned and operated by mom and pop owners. They've owned these properties for many years, and a lot of their management systems and processes are very out of touch. For example, maybe they're not using any marketing at all in today's digital age, and they're only relying on a website that hasn't been updated in 10 years. And so you can go in and purchase these properties. You can renovate them. Often you can run them free of staff, which also increases your bottom line there. You can put in Wi-Fi locks on all the doors. You can have self check-ins, self checkouts, and you can really run these properties remotely free of staff, but also by marketing on Airbnb, Verbo, Booking.com, all these different platforms, and even, marketing on social media, you can often 2, 3, 4x your revenue. And the other cool thing about the boutique hotel space that we don't see in the short-term rentals is, it's commercial real estate. So you can actually force your appreciation. In these short-term rentals, we're buying single families. We're not able to control our appreciation and force it like that. So that's another reason I do like this.
But on the boutique hotels, if you're just renting out 10 rooms and you're
mm,
using a short-term rental website to, generate the guest occupancy for those rooms, how are you forcing appreciation?
because let's say, for example, we take over a 10-room boutique hotel, and currently they're doing $200,000 in
Oh,
gross revenue.
in the
We can,
traditional way, I get that. Yeah,
yeah,
because you're just simply going to raise the occupancy, raise the rates. But usually when someone talks about forcing appreciation, they're re-tenanting the properties when it's an apartment complex, or they're adding some amenity that they can charge for, like laundry or,
got
whatever.
it. Right.
That's kind of where my mind was going. I mean, you're just obviously making it perform better, simply. Is there anything else though?
Yeah, so there's a lot of different methods to force that NOI, if you would. So, like you mentioned, we can renovate. So, renovate the units, new design, furnishing. We can add amenities such as a community hot tub, fire pit. We can do bike rentals, surfboard rentals, and those sort of things. But the other big play is just the operations. So often when you're buying from mom and pop owners, you don't need to do anything, but just come in there with some good marketing strategies and some good, strong operations, and you can double the NOI just solely off of doing that. And a lot of these properties are small, so you can turn them around a lot quicker than a 150 unit apartment complex, where that might take 3 years to
Right.
exit your business plan. Here, you could shut down a 10-room boutique hotel and have the whole thing renovated in 3 months,
Yeah.
and then relaunch. And then after you have 3 months of financials in the book, you can start the refinance process, and you could be in and out in 9 months or less. That's
Yeah,
pretty
that,
impressive. And
that that's an interesting point. It really is. How do you get the deal flow on those deals? They're very hard to find, aren't they? Because they're sort of in this space that nobody's paying much attention to.
yeah, I'm shocked. I'm shocked by the difference, or the delta, if you would, in the terms of the money that's searching for multifamily versus the money searching for smaller hotels. But to answer your question, you can reach out to brokers, obviously get in with them. They can give you access to off-market deals, and then also direct mailers, and just walk-in properties. I mean, you can go into any of these markets, and often the owner is the one sitting in the lobby operating the property, and you can just go strike up a conversation with them and see if they have any interest in selling the property one day.
Yeah. And so none of these properties will have what they call a flag on them, right? They won't be part of a franchise or any network. They'll be totally independent hotels, right?
For the most part, yes.
Yeah. Interesting. It's almost, do you find them on the regular MLS or on LoopNet or through brokers? It's again, it's this no man's land territory, right?
hmm Yeah, it really is. Sometimes you can find them on LoopNet. I do know that brokers that put the hotels on LoopNet, you can reach out to them directly, and sometimes they'll have off-market deals, or they'll have something in the pipeline that they haven't shown anyone yet, and then sometimes you can get in that way.
Yeah, interesting, interesting. And is the property near Eureka, California, is that your first boutique hotel deal or have you done others?
This will be the first boutique hotel deal, so super excited for it. But I think, with multifamily being, quote unquote oversaturated at this very moment, I think this is the path that we're going to try to go deep into, at least for the next couple of years.
Yeah, good stuff. What else do you want people to know about real estate investing? Even more on the mindset part, overcoming struggles, not getting discouraged. I mean, look, folks, nothing is perfect. Okay. Everything has its issues. Every
hmm
asset class, everything. Real estate is not perfect, but it's better than everything else, at least so far as I can tell. Just speak to that if you would. Any of
Yeah,
those.
I would say this for your listeners, like there's never going to be a perfect time to start. And if you're only waiting for the perfect time to get started, that means when times do get tough, and they will get tough, that you're not going to be successful. And so I think the important thing is to just get started, find someone that's doing it at a high level, and go talk to that person. Maybe get a mentor. I'm a big fan of paying for coaching or mentorship and that sort of thing, because it's really going to shortcut your path to success. And time is our most valuable asset. It's something that we're never going to get back.
Right. Yeah, good stuff. Rich, give out your website.
Yeah, so you can find me on social media, Rich_Summers. That's SOMERS. If you want to learn more about Fortune Cribs, fortunecribs.com. And if you want to learn more about our syndication company, it's pack3capital.com.
Rich Summers, thanks for joining us.
Yeah, thank you so much, Jason. It's been a pleasure.